What's going on, traders? Andrew O'Connell here with Pristine Capital. Today was another wild day in the markets. A lot of pain out there. We had Snapchat, which reported they're not going to meet that guidance, in the market in this capitulatory panic phase that we're in just had a complete convulsion. Let's dive into the action and we'll talk about it. Before we dive in, quick risk disclaimer: nothing in the video should be construed as investment advice or recommendations. Always follow your own trading plan, your own risk parameters. Don't YOLO into any one of my trades or anyone's trades. All right, so indices. We had the S&P 500 as measured by the SPY. After all the craziness, only finished down 0.76%. The market bears, they got to do better. We had the NASDAQ QQQ, it finished down 2.13%. IWM small caps down 1.48%. The Dow Jones actually finished out positive. It was up 0.17%. Then the ARK Innovation ETF was complete collateral damage for the Snapchat exogenous event. Pretty much what happened, and this is typical of when you're in a panic-driven market. When these institutions, they have huge losses, and they just have to, basically sell if anything goes down. ARK, the biggest holding is Roku, and all the digital advertising companies got hit very hard. We'll take a look at a few of those. Ended up finishing down 6.95%. I'm still long my ARK calls, and I believe they're either for December or January expiry, so I have a good 6 months on those. Yeah, down almost 7%. Pretty much everything ended up closing on the high end of its day's range aside from ARK, and the volatility of the market did not really increase the way you would think it would with these big declines in some of these headline indices. Market breadth was a bit on the weaker side, but we actually started off the day with complete washout breadth, and the breadth actually built up during the session. We ended up closing out the day with 63.9% down volume, whereas we started off the day with over 80% down volume. My trend model flipped back from a +1 to a -1. The Fed, it looks like they're beginning to blink, but again, we got this yesterday. They warned the macroeconomic environment has deteriorated further and faster than anticipated. This is Snapchat. And let's take a look at what happened today on our FinViz heat map. At one point during the day, this entire thing was just complete blood red, and then some buyers appeared throughout the session. Keep in mind, for month end, we do have about $6 billion in rebalancing flows that are going to be coming into equities every day. So despite the market weakness, and despite that temptation of maybe I should be selling some stuff, maybe I should be stopping out of positions, maybe I'm wrong on my thesis, I know, hey, there's $6 billion a day coming in to buy the market. Everyone that is literally selling right now, these are capitulatory sellers. Google ended up finishing down over 5%. Tesla down big, but everything else was pretty solid. And just for context and just to stay centered, today some of these names performed poorly, but yesterday, look at the day that we had. So tough to really be too upset when you look at these 2 days back to back. Our sectors, a lot of the most aggressive areas of the market, such as the ARK Innovation ETF, such as the retail ETF, such as the KWEB ETF. These were our biggest losers for the day. We are seeing headlines about China and the US and some of those tensions. They are beginning to resurface. Best performers on the day, utilities were up 2%. We had energy that finished positive, healthcare, as well as European financials. And then for style factors, the high beta style factor was the worst performer, followed by the growth and momentum style factors. And I'm glad that I stuck to my guns. I'm actually allocating my capital. I put it all on display for you guys. We really just have to stay the course, and assuming that the market's not really breaking technical levels, you just have to say, this is just intraday volatility and day-to-day volatility. Look at what happened after the close today. Buyers started coming into these ES futures, and now look at what is happening overnight. Cooler heads are prevailing, and some buyers are stepping in and just kind of alleviating the pain of these weak hands that are selling. Keep in mind, we're approaching the teal downward trend line. And this is like the final frontier of a downtrend. The market just goes down so much, and then all it takes is sideways movement for you to start bumping into the downward trend line. We could still fail at the downward trend line. That's certainly possible. But in my opinion, I actually think that these bears are exhausting a lot of their fuel. At some point, after 7 consecutive weeks of selling into a Fed that is getting a little bit more dovish, and against a backdrop of much better price levels and rebalancing flows that are coming into the market, at some point, these bears, they're going to lose their grip And I think we could end up getting another test of this 20-day simple moving average. I think that could be coming within the next few days. In the after hours, we are up 0.51%. Here was the big level I was watching today. So yesterday, we have this weekly point of control at around 39.20. We shook out below that level yesterday, and then we ripped off to the races. Now, in pure, panic-driven fashion off that Snapchat news event, the market just completely dumped. And then you can see intraday, we actually slipped even further below this weekly point of control. Now we had every reason, why not just slip down to the weekly value area low? That would put us at like pretty much an equal low from on Friday. We actually ended up making a higher low. And now we're back above this weekly point of control. So if you were selling the market between the hours of 9 and 11 when we had this huge drop, now suddenly you're like, oh my gosh, I just sold the low, and now suddenly there's this pressure to the upside. I think the next likely target for the market is this 40-10 spot 5 level, and right above that we have the teal downward trend line, and then right above that is the 20-day simple moving average. So I think we could be testing that in short order. The other thing that was interesting, and another reason why I said, hey, it doesn't really make sense for me to deviate from the game plan, the VIX. Even on the lows of the market, we went above 30 very briefly, but the VIX could not remain above a 30. And remember, when we had the worst of this downtrend, the VIX was just really stubbornly bid above that 30 level. So that was definitely a good sign. Other good sign that I saw is that cryptocurrency was not really participating in the downside of the market. Remember, we've been talking about how everyone's positioned for a market crash. Everyone thinks it's going to happen, like et cetera, et cetera. And cryptocurrency being positive on a day when the market is really like panic selling, that's not really what you would see during like a market crash. Definitely seeing some positive divergences, and lo and behold, in the after hours, we're having a bit of a rally. Now let's take a look here. This is going to dovetail into my trade. So Snapchat, this was the major culprit of the market weakness. I took a look into the actual release from Snapchat, and they said, hey, conditions have changed in the macro economy. We're not even going to meet the low end of our guidance. The low end of their guidance was 20% growth. They originally said 20 to 25. So let's say Snapchat now grows this quarter, economy's really bad, we're probably in a recession. Let's say they grow 13%. The low end of their guidance was 20. Is that reason for this stock to suddenly be half the value that it was a day ago? Down 43%? No. And I think that's where a lot of investors are getting this twisted. They suddenly think like these companies have just gone bad. Maybe Snapchat is one that went bad. It definitely is a negative fundamental catalyst, so the downside move is justified. But in terms of the magnitude of this move, this to me just seems more like algorithmic, complete capitulatory action. Then a lot of players, when the market opens today, they see the stocks down 40. If you currently owned this name, you owned it before the crash today, odds are, depending on your fund strategy, like you're just not allowed to stay in that exposure. You can't go, oh, I see Snapchat, like now this thing's undervalued, let's buy a little bit more of it. You're in the unfortunate position as an institution where you actually have to cut your loss. See, I think that has a lot to do with this sell-off. And I actually went ahead and I sold some put options on Snapchat. So here are my two trades for today. I sold the June 17th 14 strike puts for $1.54. And I'm going to get to take ownership of Snapchat at a cost of $12.46 if Snapchat stays in the dumps. Today across FinTwit, everywhere I go, I just see like, oh my gosh, Snapchat, this thing's horrible, you can't touch it. And that has been like the calling card of this capitulatory phase, where once a group capitulates and you get that huge final whoosh lower, then everyone says, oh, you can't own it now. But in reality, like honestly, like if you're selling that thing today, you're probably like, you're not an A player in my guess. And then one thing I did towards the open is I had sold some TQQQ calls against my long TQQQ position. I originally sold those for 63 cents. I monetized those as the TQQQ was coming off the lows this morning and caught a nice 40-cent winner there. And so yeah, now my cost base is $33.04. If we get a rally in the NASDAQ, then I can go ahead and once again sell those call options against my position. So I'm just trading around my core there. Those are the only trades I did for today. I take a look, like this is obviously some more panic selling. Roku reported good earnings like a week or two ago, and this stock, the market is just assuming Another digital advertising company, algo sell, and boom, it was down over close to 14% today. Pinterest, we're just going to assume the whole sector is the same, down 23.64%. Google, we're just going to lump the whole sector in with Snapchat. This one, you can tell this is obviously the most high quality name in that group. Dip buyers came right in. They scooped this thing up. So yeah, when I'm seeing like hammer candles like this in some of the biggest names in the world, yeah, that tells me that if you're a bear, you're in trouble right here. When Google puts in a candle like this, that's, to me, this looks like a pretty bullish signal right here. But yeah, all those companies got thrown out, baby getting thrown out with the bathwater. Same thing, the consumer staples had this same sort of thing last week. Growth stocks had it the week before. We're just seeing this rotation where everything is getting taken to the woodshed one by one. So far, except these commodities. Similar to how everyone thought in 2020, the growth stocks, this is a new thing. We're in the exponential age. Growth stocks can never go down. They're just such a great investment. And suddenly you're buying them after they've already like doubled and tripled and quadrupled. Now people are having the same exact assumptions about commodities. They're like, this is a new thing. Now we're in an environment where like inflation's permanently high and commodities are in a permanent bull market. So yeah, I honestly think that there is some major risk in these commodities. If the economy really gets bad, there will be demand destruction there. But that's more of an aside. That about does it for this market recap video. Again, we're gonna have to see what happens tomorrow. My baseline assumption is that these market bears are in trouble. All right, team, everyone have a good night. I will see you all tomorrow. Hope you all have a great rest of your evening.